Turbo Trading with head trader Robert Knight, MBA.
Good afternoon, ladies and gentlemen. Very, very important topics today. Heading into the last 10 weeks left, right? Yeah. A little bit over 2 months, 2.5 months into closing in 2022 and 2023. So it's the last quarter of the year here, and we are about to kick off some of the big companies earning this week and the next 3 weeks here. So we got Netflix on today, and this morning we have J&J and Lockheed Martin and a few others. Right? So this week and next week, some big companies are going here. So we got United Airlines tonight, Intuitive Surgical. Okay, so the list and go on with big companies are reporting next 3 weeks. All right, so before we get started here, anybody have any questions? Can you hear me clear, right? Make sure my microphone is working good. Okay. You hear me all right? All right, thank you, everyone. Danny like a CDC, huh? Got a thunder truck going, you know. Got to start roaring. All right. Let's kick it out. All right, so the purpose of the talk today, we go over the stock market ideas coming into close at the end of the year 2022 and what to expect and where we can invest. All right, again, these are just something that I've been putting together the last few weeks here, and I want to go over that with us. And very important that we are aware of what is going on and maybe making some educated guess of what's going to happen to the best of our ability, right? And let's start with the disclaimer here. Again, this information is not just for education purpose only, and not a recommendations or any advice to buy and purchase any security. So make sure you consult with your own financial gurus. Do your own due diligence before making an investment. All right, let's move on to this. Let's take a look at how much money that throw into the market in the last couple of years. The reason I want to go over this with you because we want to review, what has happened that led us to this point of the sticky inflation, right? So everybody know that now that the Fed is committed to fight inflation, because they say that if the economy cannot be functioning if there's no price stability. So inflation is going like a train wreck here. So they have to stop it somehow. But before we understand inflation, we need to know where it is coming from. And inflation not just appear by itself. There's a cause of it. So if you watch some of the video of what's the guy? Just my mind just went blank. A very famous economics. He's dying now, but if there's inflation, you point back to Washington D.C., right? That's where inflation coming from. So to understand inflation and And at the end of the presentation here, I will make a quick SWOT analysis, strength, weaknesses, opportunities, and threats, and see where we came from and where we at and what we expect gonna happen, so we can digitally build our portfolio accordingly, right? As a day traders, these things might not be too much important, but a lot of us in here have 401k, retirement account, IRA, business investment account, some different things, but we need to understand this, okay? And also it will help us to know where we can expect it, so we can do a better and be a better informed and be a better trader. All right. So let's take a look at this. So in the last couple of years or so, we throw into the economy about $5.2 trillion, just the COVID relief alone. All right, just the COVID relief alone. That's $5.2 trillion. All right. And these data, you can get it from the Fed. You can go in there and get this data. The USA Today, this is the source that I got it from. Okay. This including the coronavirus aid, relief, and economic security. So this just from March 2020 to March 2021. That's how much money we printed from the printing press. Okay. So next, so it's really important to understand this is this is the more than the cost of World War II. Just imagine that how big it is. Just you cannot imagine how much money that is. Because we're talking about trillion here, the T here, not the billion. That's 5,200 billion dollars. So it's a humongous amount of money that throw into the market, right? And where did that $5 trillion have gone? Okay, these are the breaking downs of where the money went. Unemployment benefit, vaccines. This is the $1 billion, 800 billion, 440 billion. School, business, some of the healthcare, some of the rental assistance, pretty small. But $1.7 trillion, the big amounts here, indirect. Where's that indirect come and go? Where did it go? Going to the banks, going to rescue some of the businesses. But the majority of it came in here. I put the link in here for you. This right here in the bottom here. This is the public data. You can go in there in the SBA.gov. You can find every single company that apply for the PPP loan, all right? So that's where the money went, all right? That $1.7 trillion went into the PPP loan, all right? Either it go into helping people to pay the employees, which is supposed to, but a lot of them, use that money to buy yacht, islands, expensive jewelries, pay for their mistress mansions. So you name it, right? So it not be surprising that majority of them are just fraud, right? Took the money from you and I, right, and use it for their extravagant life. So that a little bit upsetting, but what can you do, right? So this $1.7 trillion went into the economy, going to buying some expensive stuff, right? And who the God knows where that money has been spent at $1.5 trillion. So now the Obama Biden giving out how many billion dollars, and another $8 billion to the student loan, only $8 billion and something. And people are crying and jumping up and down, crying and say that that's gonna cause some inflation, more on inflation. Look at how much money these big boys got. versus like a few $1 billion to students, right? So you give the money to students, a few $1 billion, and people are crying and complaining, versus the amount of money that I get to the big boys, to these guys that maybe a lot of them are fraud, some of the business. You can go in here, look in here in this, you can search by the state, even in the business in your backyard, looking at them up to see how much money they got in 2020, 2021, just search by their name. All right, and then you can see like how much your local churches get. Your local churches money get money, your local business get. Maybe bar and grill owned by the big chain like Kona, a PF chain, whatever. Those big national chains, to see how much money they get from the government. Look it up. Okay. So next one here. QE, quantitative easing. Okay. What QE is, quantitative easing is the money that the Fed put into to incentivize the economy, to make the economy move, right? So this is another $4 trillion, $4.2 trillion. So if you add it all up, altogether about $9.7 trillion, almost $10 trillion. So 5.2 for COVID and 4.7, 4.8 or something for quantitative easing. So basically, quantitative easing is like the Fed make the money appear out of thin air. Right? So it's so-called money printing, by creating bank reserves on its balance sheet. With quantitative easing, the central bank uses any bank reserve, to purchase long-term treasury in the open market for major financial institutions. So new money is into the economy basically. That's just for the banks, right? So that's why they're able to give you loans for 3-4%, and they get 0% from the government, and they put in a pocket, right? So that quantitative easing is almost another $5 trillion. So combined about $10 trillion out of thin air without productivity, right? Yeah, just like print it out and throw into the market. And now you question, where the heck is the inflation come from? Now who is dealing with inflation? Who paying for it? Look at your grocery bill, your rent, see that's who is paying for it right now, right? With all these trillions of dollars thrown to the market, right? All right, so take a look at this and how bad the government spend is like more than it's. Remember when you were not you just started out, and you just like me, when it just started out, we couldn't balance our checkbook, right? So you got more red than black, and the government doing the same. They couldn't balance the checkbook. They don't know how to balance the checkbook. Look at it. They spend $4.4 trillion, and look at how much they make. They make 3.5 trillions, right? That's pre-COVID. So they're in almost $1 trillion in red. Welcome to balancing your checkbook, right? Post-COVID, they spent $12 trillion, and it makes printed in only 3.5 trillion. So now they $8.5 trillion in red. Just a common sense, right? If you spend more than you make, what do? What happened there? You got your account overdrawn. But for you and I, if you got your account overdrawn, you pay for it. Right? Eventually, you have to pay for it. For the government, they 8.5 trillion dollars overdrawn. What do? They probably keep printing money. Well, get the printing press out and pay for it, or you and I will pay for it. This taxpayer eventually have to pay for this amount. right? So they don't know how to balance a checkbook, and they'll try to tell us to balance our checkbook. Just imagine that. Just looking at these numbers, these are like it's not BS. It's real numbers, right? You cannot make this thing up. It is real as the light of the day. I mean, it's just like the sun is real. You're looking at the sun, it's right there. It's real. You cannot make these things up, man. So how much money you put in, they throw into the market now. They expect the inflation gonna go away. It's gonna be transitory, not sticky. Good luck, right? So that's where we came from. All right. So I went over this before the new year, right, with you guys. I'm gonna review this to you and see what happened. So in the 2022, we got the Fed policy interest rate hike happening, So we have that now. It's been doing it, and we have inflation. It's no longer transitory anymore. It's sticky. It's here, and it's gonna stay, right? And then we got COVID variants continue, Omicron or whatever. Now they're talking about BBE, whatever, right? So you can go out and get another shot, because just to protect yourself. So, but that's a different story. But that's real, right? Supply constraint continue. Have to dealing with China. So now we adding into Russia. So we got and then the midterm election coming. Right? Review this again. The definition of the recession here. Well, they try to change the definition, but this is what it is. A recession is a period of economic contraction where businesses see less demand and begin to lose money, so they will start to cut costs, cut employees to stamp down losses. Companies starting to let people go, so then unemployment will come. But that's what it's good, bad for the economy, but now it's good for investor. Well, let's take a look at it. Okay, so at the beginning of the year, right? These are the negative things, and this is the positive thing that we have, right? But some of these now become negative, right? So the U.S. Still sitting on a lot of money. A lot of companies, they're sitting on a lot of money. Could they throw into the market 12-13 trillion dollars? Not surprising that these big guys still all have $7 trillion in their pocket. That's a good thing. They can deploy it at any time. It's still a good thing, right? Still a green thing. Now the pent-up demand become a bad thing now. They want to suppress the demand, but we as Americans, we don't want to stop spending. Just becomes addicted to it, right? So pent-up demand is making the inflation sticky, even more sticky. You put more sugar, chocolate into your pudding, right? It's a little more sticky. So now it become a bad thing. Now this is the red thing. Now it's no longer a green thing anymore, right? Demographic, good. You got a working population is still in that age. That's still a good thing now, but now it's kind of not really good anymore. Good employment no longer good anymore for Wall Street. Now they want the unemployment to go higher so that the Fed can stop raising rate. Okay, if unemployment is still low, they're gonna continue to raise rates until they can temper it, right? So now it become a red item, no longer a green item anymore. Now the Fed policy, we put it here and I put it there, so this policy has not been good. So now it's not been good. So then been here. Now they're in the red. Now basically it's in the red side. So we got some of these, except for the number 3 and number 1 is still green. Number 2, 4, 5 now joining the red side, right? So Now they want unemployment to go higher. They want the Fed to do something better, get out of the hole. I don't know how they can dig themselves a hole by just not stop digging, right? It's common sense, but I don't know if they know that. Pent-up demand is that thing. They want the demand to be suppressed, be coming down. Come on, stop spending. Put more money in the saving account. Don't stop spending so that the demand come down, so we can curve it up, so the demand curve can catch up with the supply shortage of supply, so that we can pin the price down. So this now becoming the number 2, number 4, number 5 join into the red side. So we got more negative stuff than the positive things, right? So I wonder why the market is where it is right now, and then we can go further more. We'll see, right? Let's take a look at the next. All right. So at the beginning of the year, we talk about this, right? The bull market are not immortal. For one inside is that the curve and the market can crash. We begin to talk about this in December. So high market multiple, it's still high right now. It's not too high. It came down. So it was 30. I think it's right now about 19, somewhere there, 19, 20. An average is 15. Okay, so we got a little bit more time, more to go. If the market continue to go that way, we got some more to go. Right, and the Fed action here, raise rate, make it less attractive for people to borrow. It's, get the economy going to come back lower because less borrowing, less incentive to expand business. And inverted yield curve, it is not one of the indications, but a lot of times it's I don't want to go over too much on this, but you can take a look at it. There's a history of when the yield curve started to invert it, which means the 2-year T-bill yield is more than the 10-year bill, and how that also is an indicator. And the black swan, of course, now we're talking about the COVID was in 2022, now 2020. Now the beginning of the year in February, when Russia started to attack Ukraine, that's the black swan. And now we're talking about China, say that they can invade Taiwan anytime. We should cross our finger, but that's another black swan there. And the thing with black swan, as I mentioned, this number 4 is very important. If anything black swan happen, it doesn't matter what these good or not. If even those good black swan happen, it can affect the market. But if these are the 4 sides of where the market is coming down and maybe continue to go down, right? And talking about here, this is the question I asked at the beginning of the year or before the new year, and turned out to be when supply chain is the bottleneck, and the labor shortage temporary, or is it continue? If not, and then in the last 10 months, it proved to be not temporary, right? So the question we asked at the beginning of the year, it's a great question, right? Turn into great questions. So we see these things are already happened and still happening, right? So in summary, this is what I want to kind of a quick analysis for us, right? The economy overall, the U.S. economy is very resilient here. It's still strong, no lack of spenders, just some shortage of doers, right? And the corporate cash still pretty strong. Some weaknesses: population shrinking, right? Willing to enable workforce, lack of willing and enable workforce. The population shrinking is not many people want to have babies, and are expensive. You look at the number, the amount of money that you pay for diapers and formula, right? Retiring people are retiring. The baby boomers are retiring now, and versus the incoming workforce are not enough able to replace people who retire. Some people take early retirement. The baby boomers not the last baby boomer don't retire until the last group until 2029. Right? So now we have to look for people to replace these guys. And so if 1,000 people retire today, you got to have 1,000 people to replace them into workforce. Right? So then there's the number of unemployment number will not rise because you cannot catch up with people retired. Right? So if the Fed is looking for unemployment to rise, good luck. You don't have enough people to replace these guys. How unemployment can go? These guys, they retire, they don't file unemployment. They have to look at their security, social security. Why don't they check the number of people who file for social security? It's common sense, but they don't do it, right? To compare how many people are coming into the workforce and how people are getting out of the workforce. They don't look at those numbers. It's common sense. You don't need to have a PhD, economics PhD to figure this out. I figured out myself. Right? And opportunities. We are still a nation of innovation, healthcare, biotech, and so look for cancer treatments, some other things. Tech, we talk about AI things, right? So, and we are the biggest spender of R&D, research and development. So those are the opportunities that we're looking into the future. See, these are some of the sectors that we might want to take a look at, right? These are the threats. The drying resources, Earth is that much, right? So now China want to go into, they went to the moon and try to get some other elements up there, right? Try to explore the moon, and maybe everywhere they go, they're gonna leave behind messy stuff, but they will do, right? And also the resources on Earth are not finite, it's limited, So and then we had geopolitical conflicts, and I mentioned earlier. Russia not going to just back out easily. You understand if you read the book from the Putin playbooks. I forgot what her name's, the lady who wrote it. Look it up. So now we're talking about Xi Jinping just re-elected. I would say elected. It's chosen by the legal the Communist Party to into third terms. Now they got some of the guys, 25 people are gonna control the Communist parties, and they just said that they can invade Taiwan, that they're right to do. Okay, and we talked about the Taiwan semiconductors the other day, right? That's very important for the world. If something happened, you don't know how it's gonna affect the market, right? Then whoever we talk about a pandemic, we cross our finger that not gonna happen again, but you just never know. So there's some threat there, right? So we got some strengths and weaknesses, some opportunities, some threats, and these are pretty real threats right now. You can see in your own eyes, not something that I came up with. It's reality, right? So with that being said, all right, so this is what we talked about in the end of 2021 and 2020 for what we picked out in 2022. So let's say the first half of 2022, let's say this is 8 different stocks and 4 different industries. Let's say we put our portfolio, let's say you have $10,000, I don't know, pick a number. You divide evenly to these 8 names, okay? See what we got. All right, so from January 1st to 2022, 21st, 2022 to May 31st, the first half of 2022, XLE performed from $57 to $87. You can double check on it. You can go on your platform, double check if these numbers are correct, okay? You verify it. So 57, 87 by May 31st. ERX, $31 to $70. Gersh, 96 to 212. These are the profit and loss in dollar amounts, and this is in the percentage amount. So we can make about 100 among these 3 stocks. We make $184, turning 295%, and 6 months returns, right? And these 2 industrial here, XLI and EXI, each of them lost $10 and $17 respectively, and 9% and 13%. Q and XLV, $26 and loss, $7 loss, which is 18% loss and 5% loss. The REIT, residential REIT, 31.27 minus $4 and 12%. So the total loss is $64, and that turned into about 60% loss. So subtract these 2 numbers, $100, $120 net, and 295% net return in the first 6 months. So I'm not an expert. I don't have a PhD, and I do have one at Hartnett University, as I mentioned before. I'm not a hedge fund manager. These are, we talk about when the beginning of the year. If you just put 10 grand into it and divide evenly, you got about 100, 200+% net, about $120 total in return on that. Okay. It's unit that you own. All right. And again, and I am not a financial advisor, so I'm not telling you to buy these things. Just put it up there beginning of the year for us. If you just do that, you know, as what we talk about, a return about over 200%. Okay, so that's in recap. So what we're gonna do next year, right? Maybe that's what you've been looking for, right? So we talk about also avoiding high multiples, you know, like Zoom and those guys, right? DAQ, you know, DAQSI, whatever those how high multiple that, you know, the pandemic high flyers, right? So we avoid those guys. Second half, due to the market condition, I did not issue the new second half on it. I know Team Vol have been asking, but I've been holding back because we're not ready for it. So I didn't issue the new things for it. Just say, you know, we can deep buy these guys and just trade it. Yeah, no, we're not holding these guys. We just trade it up and down. So that's what we hold on to it. Okay, we haven't issued the second half when June began. I haven't not issued that because the market condition wasn't right. All right. So helpful big for the second half. This is what the sector that I'm looking at. Continue in the energy, healthcare. The new thing is a consumer defense. We still need to be defensive. We're not going to offensive yet, at this point. And then some industrial, especially the aerospace and defense. So those are the 4 that I'm looking at, and now into the end of the year and maybe the first half of the year, we will continue to stay defensive at this point. Right? We're not gonna go hee-haw yet. Right? I'm gonna put the list in our member site for our member, because it might not be fair for those who for our members if you're here and you're not a member. So I'm gonna put the list of individual names in this guide on our website for us. So if you're a member, you'll have access to that list. And then again, those just from me. It's not advice or recommendations for you to buy those. It's just for education purpose, for you to study, do your due diligence, and take your own risk. Okay, so With that being said, I will post that list for us. But those are the sectors that I'm looking at into the second half of the year, and moving forward. Will be updated until next 2023 coming up. All right. Any questions? Any question? How do we do? All right. Any questions? Anything that I can do for you? Anything else that I can do to help? I don't mean to scare you and anything, but these are the real threats, okay? And we have to be mindful of that. Okay, these are out of our control, right? You and I don't have the control over this. Even Washington, D.C., they don't have control over this. They might have a control over the geopolitical, maybe some of these, but I don't know if they're going to take it seriously, right? But you and I don't have control of these things. So we have to be mindful, and not something that we be scared of, but be mindful and be aware of it, so that we can adjust our investment strategy accordingly, right? So a lot of money thrown into the market, and need to take it out from the equity until the equity price is into balancing with what the money has been out in the market. So it might take a little while. I was looking at this here. It said that when the yield curve happened, usually it takes about 9 to 12 months for the recession to start. And the yield curve started inverted in April 1st, 2022. All right. So on average, it takes about 9 to 12 months for the recession to start, but that's a signal. All right, after the yield curve is inverted. Look at how much money they throw in.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.